Approaches to the formulations of accounting theory. Approaches to the formulation of accounting theory. Under that we have three methods: traditional approach, regulatory approach, new approach. Under the traditional approach we have non-traditional, theoretical, non-theoretical, theoretical, deductive approach, inductive approach, sociological approach, economical approach, accretive approach. Under that B, regulatory approach, and C, new approach. Under that new approach, first one, events approach, behavioral approach, human information human information processing approach, and predictive approach, and last but not least, positive approach. These are the approaches to the formulations of accounting theories. Accounting as a language. Accounting as a language. Accounting is a frequently referred as the language of business. Accounting as a refers to the language of business. It is a method of disseminations of information about a company. Its job, it is applied to the understanding of accounting theory or generally accept accounting principle to the practice space of the business to the income and financial situations can be standard fairly. Accounting is the process of analysis and interpreting the bookkeeping method record. It entails not only the maintenance of accounting record but also the preparing in financials and economic information as well as measurement of transactions and other business events. Profitability, solvency should be measures at regarded inverters in order to the company profitabilities and slowance. Accounting provide all the information needed by the management to the managers to the company in a portfolio and slowance directions. The user accounting statement make decisions for future operations of after thoroughly reviewing of information provided by the statement. Accounting as an information system. There are three types of the data. They are input, raw data, the process of data, men and machine or equipment, and outputs, reports and information, which can be used to draw accounting conclusions by the using of these data as information system. First, the objectives of the accounting is provide information that meets user needs, and it is users needs can be actually defined. The nature of characteristics of systems and outputs can be described. Second one, the types of the data that provide the picked as inputs of process into the informations outputs in the determinations outputs requirement. Although multiple stakeholders may be interested in the company financial information, the process or needs each these stakeholders may different. The following are examples of the stakeholders. First one, management, employees and trade union, shareholders, owners, investors, potential investors, suppliers, creditors, bankers, lenders, and research, government, tax authorities, customer. These are the examples of stakeholders. First one, management. First one, management. Management help to management in determine the business overall and segment by segment effective. It is also assist them to the make decisions and evolutions of the functions of the organization. Second one, employees and trade union. Employees care about their own well-being. Therefore, they are interested in the company's profitability, long-term viabilities and financial strategies, where trade union are interested since it might assist them to the negotiate and enter into the make agreement with the employees. Third one, shareholders, owners and investors. because they invest their money into the company. They want to know whether the company is profitable, have enough surplus or growing. Fourth one, potential investors. They are invested in the financial statement of a company as they will invested only in the company its profitability and it is good worth potentials. Fifth one, suppliers and creditors. They are more interested in the earning about the company's short-term solvency positions, liquidity positions, because they can give good and or services or credit basis only if they believe of company well being able to the repay them. Bankers and lenders. They want to check whether the company can make the investment payment as well as the repay the principal. If the providing loan and advance to the company, they would look at the firm's long term and short term solvency position of this. And tax auditor. The tax auditors tax a tax auditor ensure that tax liability are accurately computed and tax are recorded paid without delay. Last, customer. They are most concerned with the whether the company can continue to the operate and practically to have or when to have to long term relationship. These are the accounting as a financial information. Financial reporting. Financial reporting under the balance sheet, income statement, cash flow statement and statement of shareholders equity. First one, balance sheet. A balance sheet shows the company present assets, liabilities and equities. A quick glance at the balance sheet will relate total assets, minutes, equities and liabilities. In the business typically track balance sheet on a quarterly basis and information from balance sheet may be included yearly report. Balance sheet also provide company liquidity and solvency positions. As we know, balance sheet typically include the following assets: liquid assets, current liabilities, shareholders fund. Second one, income statement. Income statement. While a balance sheet examines financial positions of a company, an income statement examines the profitability positions acquires time. Some business keep quarterly income statement and use them to the track financial activities through the year. If company issues shares on the stock exchange, the company statement indicates revenue, net income, expenses and earning per capital share. The income statement or profit and loss account statement are the some document for reporting the profit and loss. This document has numerous important elements. And cash flow statement. Third one, cash flow statement. The cash flow statement is the useful of the determine the how efficiency business earn cash to pay off debt. Cash flow statement include how well organized fund from operations, finance, investment as well as the continuous activities that generally revenue to the acquired expenses. They are following are the cash flow statement. First one, operational activities, investment activities, financial activities. Under that fourth one, statement of shareholders fund. Fourth one, statement of shareholders equity. Statement of shareholders equity organized may report the informations and separate statement. Shareholders equity is normally included on the balance sheet. The statement of shareholders equity serve these objectives and provide the some investment in the company by the important stakeholders and owners. Company stock and securities that pay dividend at the regulate investors, for example, these investors. Company usually review other than the statement of shareholders equity such as sales, purchase, equity and preference shares, and maintenance of earning after deducting dividend and loans. Thank you.